Next presentation of Valuation Master Class student. Today we're going to be listening to Mary. What's the company you're going to cover, Mary?
VINCI.
Fancy. Okay, well, let me try to get your screen up. We had a little technical difficulty, so please bear with us, ladies and gentlemen. We promise it's going to be worth it. All right, now let me just try a couple of other ways to do this. Okay, I think this is the way. So why don't we do this? Are you ready?
Yes, please.
So you just take it away and I'll exit once everything seems to be smooth. So go ahead and start.
Thank you very much, Andrew. Today I'm initiating coverage on VINCI with a buy recommendation based on a target price of €141, implying an upside of 31%. I derived my target price from a discounted cash flow based valuation using a weighted average cost of capital of 6.8% and a terminal growth rate of 1%. Here are a few factors to back up my recommendation. First is the limited growth potential in the domestic construction market in France. Second is the strong international expansion of this company to diversify its revenue stream. And the last would be the company's strong profit margins through its effective cost management. My name is Mary Akiko, and in a few minutes, I'll be letting you in more details on why you should buy into this company's stock. Thank you. First, a bit of background on VINCI. VINCI was founded in 1899, is the leading player in the French construction sector, generating approximately 7% of the industry's total turnover in 2022. The company is also a significant participant in both the European and global renewable energy infrastructure market. Additionally, VINCI manages some of the largest motorways and airports in Europe. In France, the company operates nearly 50% of the country's toll road networks. In the international space, VINCI has presence in Asia, America, and Africa. I'd summarize this company as one charting the course of global expansion amid local growth challenges. There's a limited growth potential in the French construction market. This challenge is quite significant, and revenue growth experiences some challenges. France's infrastructure is relatively well established, making it increasingly difficult for VINCI to achieve significant domestic revenue growth. The French construction market is projected to grow by about 3% in 2024. This reflects the fact that the market is largely driven by renovation and maintenance, as against large-scale new projects. In the short term, with VINCI deriving 45% of its total revenue from construction activities, this stagnation in domestic growth would constrain VINCI's financial performance. In the first half of 2024, VINCI recorded a 2.5% increase in revenue from its construction segment. 54% of this total revenue was derived from outside of France. The company's energy segment also showed a similar trend. To counter the limited growth potential in France, VINCI has strategically targeted high demand regions such as Asia and Africa. Between 2013 and 2023, VINCI's international revenue grew at a compound rate of 9.9%, significantly outpacing the domestic growth rate of 1.7%. For 2024, primarily through various subsidiaries securing contracts outside France, VINCI plans to focus more on its energy segment while continuing to strengthen its footprint in mobility infrastructures by way of motorways and airports. The company's international strategy will enhance its resilience against economic fluctuations in France and contribute to the company's sustained revenue growth. I project an average revenue growth of 5% from 2024 to 2028, largely driven by these international operations. And lastly, the company has quite strong profit margin. As for 2023, VINCI reported a net profit margin of approximately 7%. This figure is consistent with the competitive landscape of the European construction sector, where profit margins typically range from 5% to 10%. Additionally, VINCI's return on equity stands at 17%, underscoring the company's ability to generate returns for its shareholders. This strong profitability profile indicates a solid financial foundation that would facilitate sustained growth in the coming years. In the first half of 2024, VINCI experienced a slight revenue increase by 4.6% year on year. The company saw a 5% year on year increase in gross profit and a higher year on year increase in EBIT of 6%. VINCI reported recurring earnings per share of €3.5, which was a 3% increase year on year. In terms of news updates, latest trends, the company has been very active in terms of acquisitions and gaining of more contracts outside of France. Firstly is the acquisition of the Edinburgh Airport, 50% stake. The company also acquired road network and materials production company in North America. The company acquired an energy company in Sweden. The company also acquired a subsidiary in Germany. This is only a few that could fit into this slide. In terms of constraints growth, I would refer to capital as being neutral. Tighter credit conditions could pose challenges, but VINCI's solid financial position and access to capital markets makes this a neutral constraint. In terms of operations, delays, cost overruns, supply chain disruptions can significantly impact profitability and project timelines. I classify that as major. For market, I refer to that as neutral because while the market dynamic presents challenges, they are manageable given VINCI's global reach and diversified portfolio. In terms of people, VINCI must compete with other industry leaders for top talents. Failure to do this would hinder VINCI's ability to execute projects and maintain its competitive edge. So I'd refer to that as major. In terms of revenue, VINCI reported total revenue of approximately €69 billion. The company's construction segment accounts for 45% of its revenue. The energy segment accounts for 36% of revenue. The concession segment accounts for 17% of revenue, while the immobilier and holding companies account for the remaining 2%. 43% of VINCI's total revenue comes from France, followed by the rest of Europe at 34%, and the Americas, Africa, Asia Pacific, and Middle East collectively accounting for the remaining 23%. Here's the relative valuation. Here I'm benchmarking VINCI against 240 non-financial companies in France. In terms of profitability, VINCI doesn't appear as competitive as these other companies in the benchmark. These companies include other companies in different industries besides construction in the industrial sector. In terms of momentum, price, and fundamental, the company doesn't seem to have kept pace with these other French companies. In terms of risk, VINCI's tight liquidity and moderate interest coverage result in a weak risk ranking. Price risk measured in terms of beta to the French market is high as well. In terms of competitiveness, I would refer to VINCI as operating in very concentrated industry, with my ranking for its competitiveness being 68%. Here's the chairman and CEO of VINCI, Xavier Huillard. And here's a pictorial depiction of what the ownership of this company is like. It is majorly owned by institutional investors. Another benchmarking. Here, I'm benchmarking VINCI's profitability against 1,320 large industries company, this time around globally. In terms of profitable growth, this company's profitable growth improved from 2020 to 2023 and has been that way in the past 12 months. In terms of ESG, environmental compliance, I'll rate this company 87, which is not bad. In terms of profit and loss, I forecast a steady increase in this company's revenue, largely driven by its global expansion. Gross net profit would increase steadily, but not outrageously so. Total assets would also increase to support the company's revenue growth drive. The company's retained earnings would improve as a result of increased net profits. Total equity would increase as well, largely driven by retained earnings. The company's book value per share would also improve. In terms of capital expenditure, I forecast that this company will continue to incur capital expenditures to drive its revenue growth, especially in markets outside of France. In terms of other investments, the company would also incur investment costs, especially in its concessions segment. I foresee this company paying dividends as it has always done. I spoke to some of these ratios earlier, so I would move on to my growth forecast. In terms of revenue, I'm forecasting an average revenue growth increase of 5% for this company from 2024 to 2028. In terms of return on equity, based on my estimate, this would range from 16% to 17%, which is quite good. Based on my estimate, free cash flow to the firm would be positive, and the same for free cash flow to equity holders. Here's another relative valuation. In terms of PB to ROE, VINCI trades at a discount when compared to other companies in the French and global industrials sector. In terms of PE to growth ratio, VINCI trades at a premium based on estimates for 2024 when compared to other companies in the French industrials sector. For valuation purposes, I assume the risk-free rate of return of 2% and a market equity risk premium of 6% for the French market. I use the company beta of 1 and project a capital structure of approximately 29% debt to total capital. This results in a WACC of 6.8%. I applied a terminal growth rate of 1% and used the free cash flow to firm method to value this company. In my best case scenario, I forecast a sales growth of 5% until 2028, leading to an estimated value of €104 per share using the free cash flow to firm method, representing a 31% upside from the current market price. In terms of risk, VINCI's construction and energy segments are highly sensitive to fluctuations in prices of commodities such as steel, cement, and energy. And with the company's increased expansion into global markets, there's the increased risk of geopolitical interferences. In terms of project execution, the company's profitability could reduce if it fails to execute its project as at when due, leading to damage to VINCI's reputation or other financial penalties or even future project loss. With this, I'm recommending a buy based on a target price of €104, implying an upside of 31%, which I derived by target price from a discounted cash flow valuation using a weighted average cost of capital of 6.8% and a terminal growth rate of 1%. I'll take questions now. Thank you.
All right, excellent. One of the questions, first question I have is, why did you pick this company, or how did you find it? Did you something that you knew about, or did you search around and find it?
I searched around to find this company. I'm particularly interested in the infrastructure sector. So during the internship, I valued the company in the telecommunications space. And for my final presentation, I just gravitated towards infrastructure. It's one of my
And,
interest segments.
and one of the things that's interesting about this company is how steady it is. Is that
Mm.
just because it's got mainly contractual revenue, or what? How does it maintain that steadiness?
The company has very sound management, and yes, they are big on contracts. Although it's not easy to win, but I think because of how grounded the company is in the infrastructure space, they do a great job. Getting contracts anywhere from France or even outside France requires some competitive bidding. And for some reason, VINCI has had a hang of it. They've been in existence for a lot of years. They were founded in 1899, and they are a market leader, especially in France. Currently, the market is highly fragmented with a lot of small players, but when it comes to the large players, VINCI is one of the biggest companies in France. So I think their size allows them to win contracts on a steady basis.
And why do you think there's so much upside? Are people not looking at this company, or is there something that people may be missing?
Perhaps people aren't looking at it because in my forecast, I didn't go too optimistic. I naturally would tend to apply very minimal growth rates. For 2024, the company did an 11% increase in revenue in 2023, but I brought it down a bit. I foresee that the company would keep this momentum, but I applied 7% in 2024 and then 4% in the remaining years. Despite my minimal um, revenue growth forecast, the company still does a whooping 31%, which is a good one. Perhaps people are not saying it that much, but I think it's a good company to buy into.
And how does it feel to graduate from the Valuation Master Class?
It feels awesome. I've had an explosive time at the boot camp. I had, nah, my experience was awesome. I really enjoyed it.
I'm glad to hear that. How would you describe what's different about you today compared to when you first went in?
A lot, a lot. Firstly, I know what goes into the forecasting process. Before now, when I hear forecast, I wonder how do people come about this? How did they arrive at this percentage? What goes into the thought process? Now I know exactly what to look out for and how to base my estimates based on the company's historical performance and what the market is saying, in addition to a few market considerations like competitiveness, the growth of the market, and the rest of those.
And how does that change the way you feel about yourself and about what you can contribute, or maybe the confidence that you have?
My confidence level has always been quite okay, but now I'm a lot more confident, especially when it comes to finance, company valuation, stock valuation matters. I think when it comes to company valuation, I would speak from a point of experience or knowledge. I'm not just coming as a novice. So my
Yeah.
confidence level has definitely improved.
And what is your future? Maybe just generally, what did the Valuation Masterclass change anything about the way you think about your future now? Or are you still on the same track as where you thought before you entered?
During the course of my internship, you would notice that when I come into office hours, I would ask questions about consulting, I'd ask questions about investment banking. I just want to have a feel of which of the spaces I would fit well into. So yeah, I think I know what I want for myself as direction and my starting points as a matter of fact. And the funny thing is, I never said this, Andrew. The first time I came across your program was in 2021. I think it was a women in valuation
Hmm.
program, but I signed up and just never saw it through. But I think this is the best time for me. And this time around, I get to do it at a professional level. So I'm super grateful for that. Thank you very much.
Yeah, well done. And it was great having you in and watching your progression. So, congratulations.
Thank you. Thank you so much. And thanks to the team. Thank you.
Yep. Hold on one second. I'll be back. Hold on. Well, ladies and gentlemen, another valuation. If you want to build a competitive advantage in company valuation, join us at the Valuation Masterclass. Just go to valuationmasterclass.com and we'll